ahead, go.
Don't deduct your mileage on your tax return. Why would you not want to do that? Is that not one of the most basic deductions you can get? Well, it is, but there's very specific reasons and very specific circumstances where you're not going to want to deduct your mileage, and most realtors are deducting their mileage. Fun little fact before I get into this, I'm currently walking over a stream. This trail that we're on is ice that's accumulated over the months of winter, and in the next few weeks, this trail that we've been walking all season will be gone, which is kind of a cool thing about living in Maine. Anywho, you want to know why you shouldn't deduct your mileage. Now, how many of you watching this have a nicer vehicle that you drive? When you work in real estate, you know, your clients, they see the way you dress, they see the way you take care of yourself, and they see the kind of car that you drive. So many who work in the business, they opt for a nicer vehicle, Mercedes, Lexus, things like that. Well, the mileage is based off of a flat rate. You have the option with your auto expense of either deducting that flat mileage rate or taking the actual expenses of your vehicle, which is going to include gas, maintenance, as well as depreciation. Now, needless to say, depreciation is based off the cost of your vehicle, something that we in the accounting world call basis. Here for the camera work here, I gotta duck under this and walk across an icy ledge. So you have your depreciation, which is based off the cost of your vehicle, and of course, a lot of these nicer vehicle lines actually require you to do maintenance that costs more than a typical oil change. I think for Mercedes, when I worked at a dealership as a kid, oil changes ran as high as $400 depending on how many miles you had and what vehicle you had. Now, something that we like to figure here is, what is your maintenance cost for every 10,000 miles? The higher the basis of your vehicle, how much you paid for it, and the higher your maintenance cost per 10,000 miles, the more likely it's going to be more favorable to take actual expenses. So if you have that Mercedes and you have $300 oil change every 10,000 miles, they call it a maintenance, but it's mostly an oil change. You have that $300 cost for every 10,000 miles just for the maintenance, plus the basis of that vehicle is going to be much higher. Mercedes run $30,000, $40,000, $50,000. Generally over $30,000 is where we start to see actual expenses be more favorable than taking mileage. You might have a more economical vehicle like Honda or Subaru. That might need a same oil change every 10,000 miles, but it's only $70 as opposed to a couple $100 like a lot of these luxury lines charge. That said, you could have a really weird vehicle like mine where I have a Subaru, but it has a turbocharger in it, so I have to get an oil change 3 times as often as a regular Subaru. My maintenance cost for every 10,000 miles comes out to more like $200. Now, the problem you're going to run into is most tax preparers are just going to take the mileage no matter what. They're not going to run the numbers for your actual expenses and see if that's more favorable. So the probability that you're missing some really good deductions is very high in that case, especially if you have some of the vehicles we talked about. If you drive a nicer vehicle, you know, you like Lexus, you like Mercedes, I'm a fan of Mercedes myself, or Audi, also a huge fan of Audi. If you drive nicer vehicles like this, you're much more likely to have a favored deduction that's going to lean towards taking the actual expenses of the vehicle as opposed to taking a flat mileage rate. A lot of these nicer vehicles take premium fuel, so you're paying something like 80 cents more per gallon depending on the state that you live in. Look at this. Look at that. That was all frozen about a week ago. So now that you understand more about how these vehicle deductions work, take this knowledge and apply it to your business today. Take a look at some of your past returns and see if you missed out on a good chunk of deduction in past few years. It's not uncommon to see a $10,000 to $20,000 difference in deductions by using tools like depreciation and actual expenses over mileage under the right circumstances. Make sure to visit realestatetaxplanning.com/book to schedule your free consultation if you're looking for a tax professional who's going to be more proactive, not just about the deductions on your tax return, but in all your deductions throughout the year.